Fitch ratings: as inflation exceeds deposit rates, dollarization in Turkey may increase even more. Fitch Ratings said that with real deposit rates moving into negative territory, the already high dollarization in Turkey could further increase, and an earlier than expected interest rate cut would lead to further depreciation in the Turkish lira. Fitch Ratings Europe, Middle East and Africa Banking Director Ahmet Kalink said, as confidence in the Turkish lira weakens and depositors turn to gains from exchange rate volatility, dollarization is already high at 55%, and that in recent years, dollarization is already high in Turkey. He said it had risen sharply, stating that real deposit rates will turn negative and the increase in inflation will put more pressure on the Turkish lira. Kalink said that the depreciation of the Turkish lira will also pose a risk to foreign currency loans, which constitute 36% of banking sector loans, and will increase the debt service cost for those borrowing foreign currency. Market volatility and the depreciation of the Turkish lira increase the refinancing risk of Turkish banks. The expectations of foreign investors are important due to foreign currency borrowing, which constitutes 1/5 of the banking sector's total funding, said Kalink, emphasizing that these factors may put pressure on banks' capital adequacy ratios due to the weight of foreign currency assets. An earlier than expected rate cut will cause further depreciation in the Turkish lira and increase banks' credit profile risks. Stating that an earlier than expected interest rate cut will cause a further depreciation in the Turkish lira and increase the credit profile risks of banks, Kalink said, however, the interest rate cut can reduce the pressure on the floating rate loan portfolio by reducing the cost of Turkish lira debt service and increase the demand for local currency loans. Interest rate cut comment from President Erdogan. President Recep Tayyip Erdogan, on the other hand, pointed to the months of July and August for interest rate cuts in a broadcast he attended on TRT in June. And in his last live broadcast on Wednesday, he said, "From now on, it is not possible for inflation to go up. We are also going down in interest rates, there is no high interest rate," he said. Emphasizing that high interest rates will bring high inflation, Erdogan added, "I must have given my signal to certain places, especially from here. Because it is not possible for inflation to go higher from now on, because we are going to decrease once in interest rates." The CBRT said that its policy stance would continue to be determined on inflation. In his speech at the third inflation report briefing, CBRT chairman Serap Kavşioğlu stated that commodity prices, exchange rates and increasing demand had an upward effect on inflation and that his policy stance would continue to be determined on inflation. Many economists and analysts stated that there was no room for interest rate cuts as inflation rose to 18.95% in July and they did not expect any rate cuts until the end of this year.